I own 5 businesses, and the largest of those is on track to do about $10 million in revenue this year. But I own next to no property. Now, people often ask me why I'm not enthusiastically investing in property, crypto, and other assets. And the answer to that is, well, I choose not to. And the reason why is a little complicated. Let me explain. For me, I'm an expert in building wealth through businesses, and I'm not an expert in building wealth through other asset classes. So primarily, I'm building my wealth through what I know, which is investing in businesses that I know I can build and I know will get strong returns for me every time. There's a great quote that applies here from Warren Buffett, which is to invest in what you know and nothing more. And I agree with that, but the truth is just a little bit more nuanced. You see, there's a big difference between the opportunities that I use to earn me money versus the opportunities that I use to park my money once I've earned it. And this has a lot to do with the stage of life that I'm in right now, with how I balance where I earn money and where I park money. Now, even though I do fundamentally believe that being conservative with money spending and being conservative with placing funds into assets is important, I'm also willing to take on a little bit more risk based on the stage of life that I'm at. Right now, the risk is lower and the potential rewards are high, meaning that I've got the opportunity to optimize my growth and have compounding results in business when I continue to reinvest in the businesses that are working for me. So maximizing my income and my impact are my primary goals right now. In the future, when I've exited my growth era and I'm more in the harvesting and mentoring era of my business and life, well, that's when I'm willing to have more stable, safe returns on investments with less risk and probably less returns as well. Now, I've started talking about things in eras and life stages. Let me give you the map of how I actually see these. If you're starting entrepreneurship at a young age, or maybe you're someone who's curious to give it a go, I see the earlier stages of life between 15 and 30 years old as the experimentation stage. And this is really your opportunity with near zero risk of things going wrong to try things out. You're probably going to be living at home with your parents, or you've got very little responsibility when it comes to kids or career or anything else that's relying on you in life. If you had a big fail event in your business and you had to go back to zero, you could probably survive that pretty easily. And like if you've got friends in university who don't have any money anyway right now, you're probably going to be on a level playing field with everybody else in your age bracket, so you're safe to experiment with entrepreneurship. The next phase or era is called the expand phase. Now, by this stage, you've probably got some skills bedded down. You know what you like and what you don't like. You're pretty clear on your values. And here you've got an opportunity to really use your skills to grow assets in a pretty spectacular way. Now, for me, I've got an existing business that I started when I was quite young, and I now know the industry, I know my skill set, I've amassed an excellent team around me, and I've got the momentum of capital that I can build on. All of these elements put together mean that I'm in a great opportunity to expand my wealth and expand my business to have more impact for my customers and to better serve the world. Even for an entrepreneur who's ticked all the boxes and bought all the toys at this stage in their life, I still believe this is important for entrepreneurs to double down and have more impact. Once you're happy and comfortable with the income that you've built for yourself and your family, well, it's time to start thinking about how you can better impact the community and how you can better impact those that you touch with your business. As an entrepreneur reaches a more mature stage of life, I like to call this the enjoyment phase, and you may even progress into the mentorship phase as well here. You see, someone who's built a successful business, a successful wealth and asset portfolio, has the opportunity to pretty much do whatever they like. And the opportunity here is to enjoy for yourself, but also to give back and to share as well. This is a great stage in life for you to be able to give back by mentoring to others, by contributing to your communities, and by helping businesses that are in the earlier stages of their growth get on their feet and become successful as well. Even though I've been lucky enough to enjoy some of the fruits of this phase, like mentoring and sharing and helping with others, I'm not quite there yet, and most of my energy is still in growing and expanding my business. But if you stick around long enough, I'll keep you posted on what that looks like. Subscribe and I'll give you another video in 10 years on how that's going for me. Now, no matter what stage of life you're in, I want to get back to the basics of my philosophy here and how I approach investing in what I know rather than what everyone else asks me to. So let's map out what some of these investment options look like to you. On the very safe end, we have our institutional investments, things like index funds, we have bonds, maybe certificates of deposit, and those kind of things are pretty darn boring investments. They're really only the kind of thing for you to put money away for retirement and effectively start building up a kitty that you can rely on at some point later in life. You may choose not to invest in any of these when you're in the early stages of entrepreneurship because you might want to have the biggest amount of leverage for everything else that you want to build. And while I can't give you any advice on what to do for your own situation, that's exactly what I chose to do. Next step on our risk reward chart is moving into property. And for most people based here in Australia, it's one of the most common ways for people to build wealth. Now, property is a great place to park cash that you've already made because you can use the bank's money for additional leverage, which can help you to compound your results. Property is also fairly low risk unless you're getting into development projects. If you're just buying and holding, it's probably going to go up and pretty hard to lose money in that way. Next up is where I love to play, and this is what I call the smart business arena. Now, this is where you have some kind of equity or skin in the game in a business, and you have an opportunity to control the outcome. Businesses that are on the stock market that you buy a very small percentage of don't really count for this. This is businesses that you are involved in strategy in some way. To complete out our investment board here, we then have risky business, and this would be investing in startups as an angel, helping out your friend's business that, maybe you don't have any equity in at all, or the more extreme, very risky investments like your crypto and other speculative investments. It's not to say that you shouldn't be involved in any of these at all, but most financial advisors would probably say stick to less than 5 or 10% of your total net worth going into investments like this. Now, you might be freaking out thinking, Pete, but my friend has this amazing idea. Their app is going to be awesome. The challenge is, and the reality is that most businesses fail. Most fresh business owners have many failures. And if you are the person funding a business that is potentially going to fail, well, you'd at least probably like to own 100% of the equity in that business before you go down that road. There's a reason why many venture capitalists and angel investors will invest in 20 or more businesses at a time. And that's because they're expecting to have one winner who's going to pay for their 19 failures. So while there's lots of options for me in the investment landscape, I choose to work with smart businesses that I'm heavily invested in, that I can have a movement on the needle of the outcome of the business. It's just where I know I can create positive results. And for any entrepreneur who is skilled in business or skilled in strategy, I believe this is the best place for you to be. Let me tell you about an investment in a smart business deal that worked out great for me. 3 years ago, I made an investment in a competing technology business, which at the time wasn't performing very well. After my initial investment and an initial time investment to help improve the strategy of the business, well, it's now returning me hundreds of thousands of dollars a year in dividends. And I really only spend a couple of hours a month managing that business. It has a bright future, and it's created pretty insane return on investment for me. Let's dig this apart a little bit. I've been successful in the technology services industry. I know it well, I know the landscape, and I know how to create operations in a business that works well in this particular industry. Using that knowledge, as I built a relationship with someone else in my industry, I noticed that their business was underperforming, and I could see clear missteps that they were making in strategy to help their business be more successful. That competitor was aligned with goals with me. The founder wanted the same things that I wanted, but I could see that their business was a number of years behind the success that we had had in our business. I had basically walked a little further down the path than they had walked. But not only were they a little behind for us, they were also challenged as well. They'd had a number of years where their revenue was stagnant and the business wasn't really performing in high growth mode. Now, the interesting thing about this was the issues in the business were obvious to me, but they weren't obvious to the founder of the business at the time. You see, some of the issues were in areas which were not the core skill of the founder, like finance and marketing. And I'm pretty strong in those areas and was able to instantly see where he was going wrong. Now, I was able to broker a deal where I took a significant equity stake in this business, and the founder was able to stay on as an equity holder so he could share in the winnings as we continued to work and improve the business together. In the 3 years of ownership, we've more than 5x the net profit of that business. And not only that, but we've set up the financial systems, the staff are all set up for scale, and the business has a bright future ahead of it. Not only that, but the founder was able to take extended overseas holidays in Europe in a completely different time zone, something he hasn't been able to do for nearly 15 years since starting the business. Now, I can't tell you how rewarding it is to walk into a business, improve the business, and receive massive return on investment for me. Now, in the first 12 months, I had my investment returned to me, and every year since, it's continued to compound my results. This is a great business move, investing in a smart business. So now it's time to hand the microphone over to you. I'd love to know, what are you investing in? What's your business, your passion? What's your project? And how are you making that the center of your life? Let me know down below.